Is value investing dead? Should you only invest in growth stocks? We're going to talk through that idea today. Stick around. Today, we're talking about a popular investing question. Should you invest more in value stocks or growth stocks? The idea of value stocks is that you value a company and then you invest whenever it is discounted. It is not fairly valued. But growth stocks, the story behind growth stocks can be so much more fun. Right, Mike?
Oh, yeah. They definitely have the story, the cocktail party discussion. And really, if you're an investor the last few years, growth has far outpaced value. So it's been the much smarter decision.
So why has that happened? And then can you give a little context of how much growth has outperformed value?
Yeah, I mean, it's extensive. So growth has outperformed value by about 21% per year through the last 3 years through end of June 2020. And that's, historically back to the mid 1920s, as value has outperformed growth by about between 2 to 3% per year. So we've seen a massive outperformance of growth versus value, which is have many questioning whether or not to even invest in value companies.
Yeah, we're talking about those growth companies too. It's the FANG stocks, right? Facebook, Amazon, Apple, Netflix, and Google. And there's periods in history where you've seen similar things happen with similar types of stocks. But of course, you always got to ask this question, and people often do when things are performing very well. Is this time different?
Yeah, and to your point, that is correct. We've seen this story before, and kind of for those who remember, in the mid 60s, there was something called the Nifty 50, which were these can't lose group of 50 stocks. Obviously, in the late 90s was the tech bubble, the internet companies. And unfortunately, what happens after these periods is we see a significant underperformance. We mentioned in the podcast, we talk about a rubber band. If you pull the rubber band too far one way, what happens is it snaps back the other. And that's what happened in those two other situations where we've seen a select group of companies or sectors outperform materially more than it has historically.
I mean, value investors have felt like they're driving the wrong way down a one-way growth highway, right? And that could be a dangerous idea and situation. So you want to make sure that you're adding in something that can counteract that, right? I mean, so how do you address this, and how should we address this going forward?
Well, first of all, this is, as an investor, there's no investing is without risk. And just because, value has outperformed growth over the long term does not mean that it's necessarily going to do it in the future, although the evidence would support that. What's important for you as an investor is to have an investment plan and stick with it. And part of that plan is to stay diversified. Our view here at Financial Symmetry is you should own value and growth companies. Just our view is you should own more value than growth because of the better expected long-term returns.
Yeah, and we'll include this chart here in the show notes and demonstrate it here that shows the top 10 stocks over the last 10 decades or so, to just give you a reminder that these stocks, there is rotation in what performs well over time. So it can be dangerous to get enamored with one story or multiple stories of companies that can be fun to talk about, but can be detrimental to your long-term investing strategies. So if you have questions about your own strategy or how you've made decisions in the past or are struggling making decisions in the future, we're here to talk through that with you. You can subscribe so you don't miss the next video, or check out many of our other videos and or podcasts at financialsymmetry.com.